Welcome to the Ag Commodity Corner Plus. It's July 11th,
everybody.
2025. And our title this week is USDA crop reports trade deals a bust, plus a monster U.S. corn crop equals lower prices. Let's get into it with our summary chart of the week. And it was another crazy week in the markets. Corn down new lows, 24 cents. Soybean, that's September. Soybeans down 51 cents. I think demand is weighing on that soybean market, but I think lower soy oil futures also weighing. Canola down 37, being moved around by both weather and the vegetable oil complex, including soy oil futures. Minneapolis took a hit late in the week, down 34 cents. And then lean hogs. We talked about lean hogs last week. It felt heavy to us. Now retesting the first resistance around that 105, went to 110 to 113. So we'll see if we can recover from here. The funds are still too long, the hogs. So futures are at risk of moving lower. Live cattle. The themes that have been working over the last 3 years continue to work even today. And one of them is live cattle, feeder cattle. Bitcoin, amazing, hitting 120,000. And even both the S&P and the NASDAQ were approaching and hitting record highs for the week. Let's start off with this monster U.S. corn crop.
Yes, Bo, like you said, it's been a bit of a noisy week. Unlike last week where we had those holidays and was quieter, it's been a landmark week for some of those assets, like you mentioned. Let's start here with the U.S. corn production outlook. We've been getting a few private analyst estimates for the U.S. 25-26 corn yield. Seems like StoneX is at the highest of that range, coming in at 186.9 bushels per acre. Now, you put that along with today's harvested acreage number of 86.8 million, and you get a production figure of 16.2 billion bushels. More, though, where do you think that corn yield estimate should be?
Well, after this week's USDA crop progress report that showed corn good to excellent nationally at 74%, Iowa at 86% good to excellent, it's hard not to be talking a 185 to 190. That's where we're at as a company. I think that's where it can land, somewhere in there. I think the optimistic bull is hoping that we hit new lows early so we can just get it baked into the cake and move on with life. But there is a trade range of 183, 190. I thought we could actually increase the yield in the July crop report today, but obviously the USDA did nothing. There's no protocol for them to do it, but I thought if there was a year, because everything looks so good, it could have been this year. I am hearing chatter of 200. Now, you'll find that over time. We like to stick our necks out. We like to try to predict the future with some certainty. And last year we were projecting a 185, 190, and of course Mother Nature had a different plan, and we ended up being something smaller, but just delayed by a year. But we still got to get through August. We still got to get that good finish, because weight and kernel weight yield comes from kernel weight. So we're not out of the woods. It's not in the bin just yet, but so far it looks really, really good. And I think it's this weather. This ideal weather, especially going through the corn pollination stage, that is really offsetting this strong demand.
Let's spend some more time on that July USDA WAS day that came out today. It was mostly close to trade expectations. The big news, though, and the highlight was that increase in the old crop U.S. corn exports. And that led to a cut in the ending stocks for old crop, and which affected new crop ending stocks as well. So new crop currently is at 1.66 billion bushels versus last month at 1.75. On the soybean side, again, they increased old crop exports, but they cut new crop exports. All in all, soybean new crop ending stocks came in higher at 0.31 billion bushels versus last month at 0.295. The other highlights include a slight bump up in the Brazilian corn production to 132 from 130 million metric tons. The U.S. wheat crop also was increased more.
Yeah, so this report wasn't a big surprise. I mean, the USDA increased corn exports for old crop 24-25 by 100 million, offset it with feed, which the market was expecting because of the quarterly grain stocks report, by 75 million. So net ending stocks come in lower at 1.340 billion. But it's the pricing environment. In past years, when we've had a better pricing environment, tight ending stocks on corn would provide a better price, $5-6 corn. And unfortunately, this time around, we're not seeing it because it's the weather. The weather is so ideal that it's offsetting this higher demand. Now, I think if Trump was able to pull a rabbit out of a hat and sign a Chinese trade deal that could spark even further demand on corn, maybe that might change the sentiment. But at this point, we're hoping that we hit a low early in July or August, and then we can move on.
And looking a little closer into that corn balance sheet, and we spoke about the increase in U.S. corn exports. Actually, it's been raised to record highs. The target for 24-25 is 2.75 billion bushels, and the current pace is at least 1% higher than what the requirement is on a weekly basis.
Yeah, so the USDA increased it to 2.750 billion bushels. Prior to that increase, we were 28% ahead of last year, and this is very resilient for this time of the year, and this includes no China. No Chinese buying. So it's pretty amazing that we're matching the 2021 green line on the chart there, because that's when China was buying due to that phase one trade deal.
And Mo, sticking with trade, and I'm sure you'll have a lot to say about this. I'm just going to read this out. This is regarding the latest on tariffs from the U.S. and Donald Trump. So U.S. President Donald Trump on Monday set a 25% tax on goods imported from Japan and South Korea, as well as new tariffs on a dozen other nations that would go into effect on August the 1st. And then on Wednesday, he said Brazil goods were going to be tariffed at 50%, again starting on August the 1st. And then today, he has imposed a 35% tariff on Canadian goods, again, starting on August the 1st. And this is despite both those countries supposedly negotiating or nearing something close to a trade deal. And also more, besides those main trade partners, you've got Myanmar and Laos being tariffed at 40%, Cambodia and Thailand at 36%, Serbia and Bangladesh at 35%, Indonesia at 32%, South Africa and Bosnia and Herzegovina at 30%, Kazakhstan, Malaysia, and Tunisia at 25%. A bunch of tariffs.
Yeah, this is never good if you're trying to, sign some trade deals. But the market's getting used to it. The stock market's kind of desensitized from this. The funds with ag really want to see some ag purchase agreements. And after 3 months, we've been very disappointed. But we've warned in past podcasts that these deals can take a long time to do. So I'm not surprised. And of course, Japan is the second largest corn buyer. South Korea is the fourth largest. Brazil is the number one beef U.S. importer. So slapping 50% tariffs on Brazil doesn't help that, although supply is tight. So, they're talking that Team Trump and Team China will meet in August. And now there's talk that Xi and Trump will meet sometime by the end of the year. So at the earliest, maybe we get a Chinese trade deal in 26, but to us, that's still early days.
Some good news on the tariff front comes from Indonesia. So to secure a trade deal, supposedly Indonesia has agreed to buy $1.2 billion of U.S. wheat. So good news for wheat, which would amount to about 800,000 metric tons this year, which is 8.1% higher year on year. And for the next year through till 2030, the expectation is for 1.2 million metric tons at a minimum. And as the second largest wheat importer, as you guys can see on the chart, it forms 5.6% of total global wheat imports.
So this is good news. This is, the purchase agreements that we were looking for, but we need more. And some in the trade think that if we can accumulate a bunch of these small purchase agreements, the total will matter and we don't need China. I don't know about that. I think that's a stretch, to be honest with you. So China's the big elephant in the room, as always. But, moving in the right direction. Don't forget, guys, if you're not signed up to our program, some of the info that we provide to our members, you cannot find anywhere else. We do a lot of monthly basis analysis. We don't do it daily. It's just too much because sometimes basis doesn't really move that much. But we did provide some insights there. And we do basis for all regions, United States, Western Canada, Ontario. And then, of course, we had our post-USDA July game plan. So check that out. Don't forget to sign up to our channel. It's free. We don't charge you for that. And don't forget to provide some of your comments as well. Always looking for some feedback.
Now on to the real good news. And like we mentioned, it being a landmark week and the start of the show, one of the stars of the show would be Bitcoin. Bitcoin climbing up to record highs, more hitting 120,000 US dollars as of this week, and a lot of it is being supported basically by institutional purchases, fund buying, and also there is legislative support from the US Trump government.
Bitcoin has attracted more capital faster than any other asset ever in history. Amazing. This to me is a wow. We wrote about it 2 years ago, and we told our clients what to do with it. If you sign up, I'll send you that report. But look, I'm assuming everybody had $1 in 2010. If you had $1, and if all you have to do is take the risk. If you don't take the risk, you'll never know. But $1 today is worth $2 million. Wow. And not only and the performance in Bitcoin is up since 2010 over 44,000%. And with NVDA in this next chart, it's up 33,000%.
From one star to the next. And like you said, NVIDIA is up to record highs today. It is the first $4 trillion company ever in the world, the first to reach that landmark, and it keeps climbing. In terms of the prices, as of today, it hit a high of 167.89 and also beating rivals like Apple and Microsoft.
Yeah, this story is amazing. Wall Street got this one wrong. They thought AI was going to, that demand was going to slow down. Tariffs would impact that demand. That hasn't happened. Let me leave this with you. NVIDIA's income next year in 2026 will be 20% stronger than Microsoft's, which is the number 2 largest company in the world, and 40% stronger than Apple. It's an amazing story, and I'll see you all at 5 trillion.
Moving on and looking at the U.S. crop weather. The weather looks great, which is great for production, but not so great for prices. So the U.S. weather outlook seems to be favorable for new crop yield potential. Rain is predicted for most U.S. crop areas during the coming 10 days and a week. But as a whole, there does not seem to be much in terms of a threat for the U.S. crop more.
So if you look at this chart, see this area right here? This is that northern Illinois. So most areas have been getting a lot of rain, but northern Illinois was missing out, and they're finally getting some rain, and there's more rain in the forecast. So all in all, again, it looks non-threatening for the month of July.
And to look at the other weather in North America, more rain is needed in Western Canada, and a 1 inch in terms of rain amount is expected this weekend and the next periodic rains expected to fall every 3 to 4 days with no excessive heat in the forecast. At the end of June, 62% of Canada was in some form of drought, and 66% of ag land was in drought, which is up from the end of May figure of 53%.
Yeah, so they're expected to get some periodic rain every 3-4 days, maybe an inch in some areas this weekend, another inch next weekend. What's helping the crops through the end of July is a lack of excessive heat. But it's very hit and miss. So at this stage, it's very difficult to figure out how the crops are going to end up. The next 3 weeks is critical. The farmers we talk to say, yeah, we got some rain, but every time they forecast the rain, it just doesn't materialize or verify.
From one of those, or rather from two of those main markets in Bitcoin and NVDA to the next start of the show, which would be the cattle complex. But before we get into those prices, initially to look at the latest news that is affecting the cattle complex, USDA announced the immediate closure of livestock trade through southern ports of entry in the U.S. after screwworm was detected just 370 miles south of the border in a location in Veracruz in Mexico. And the U.S. Ag Secretary said that Mexico must demonstrate additional progress combating the New World screwworm issue in Veracruz and nearby Mexican states.
The border needs to stay closed. I'm sorry, but at some point, I think the next headline will be, we found screwworm somewhere in the United States. We already, if you remember, a few weeks ago, we had a rumor that it was found in Missouri, but it was false news. So fake news, I guess. Anyways, between the tariffs with Brazil and now the closure of the border, supplies are going to get tight. It's bullish. Cattle overall, and you can see from this chart that that bull market remains intact. It's still a bull market.
Let's look at the latest CFTC as of real time, and we'll possibly would have already gotten a CFTC update. Real time, it looks like corn is net short minus 210,000, the managed money funds in corn, whereas in soybeans they would have gotten into net short territory today. Lean hogs, as of last week, went into record net long territory at 134,567. Canola still is sticking around that record high territory.
After this week's performance, I think the funds are continued to sell the corn, continued to sell the soybeans down 51 cents. They're still long livestock and canola, but both canola and lean hogs are creating a top. They feel heavy. We'll see. I mean, they're still at risk of moving lower because the funds are just too long. So thanks for watching this week. Really appreciate it. And if you're, in Ontario, don't forget about our crop tour. It's almost a month. Actually, it is a month away from starting. We start on August 11th. So hopefully you can join us there as well.
Bye, everybody. Have a great weekend.
Take care. Until next Friday, be good.